Farmer Ranch Group. For those of you who are first joining, this is the Land Bulletin series where every other week we discuss the ranch and sporting property market, buying and selling advice, the latest best stewardship practices, as well as topics currently impacting landowners. Murr Ranch Group is a full-service ranch real estate brokerage and consulting company focusing on legacy ranches, sporting, and conservation properties around the West. Today, we are going to be talking about the outlook of 2023 as it relates to the ranch real estate market. We'll review market conditions, buying and selling advice for clients at this point, and we'll cover what we're seeing as we come down from the feverish ranch buying boom of the pandemic over the past couple of years. While things might be changing a little bit, there's nothing to worry. Thank you to everyone who has submitted a question. We'll try to get to them on this broadcast. Please feel free to ask your questions in the comments, and we'll get back to you as soon as we can if we can't get to them now. Helping me out today is the czar of the ranch real estate market, Ken Murr. Welcome, Ken.
Good afternoon.
Good afternoon. I almost called you the sage, but I thought that was a disservice to the sage of world-class rock on KBCO.
Thank you.
You're almost there, though. Well, thank you for joining us today. I know a lot of people are considering selling, considering buying. This is kind of the time where we start to send out a lot of proposals and talk to a lot of prospects. So it's good to know kind of where this year is headed and kind of look at what we might have learned from the past couple of years and where we're going now.
Well, spring's always a time where we kind of, or winter into spring where we, start gathering listings. Sometimes it's just difficult in the winter months, of course, in the Intermountain West to sometimes even get around and show properties. So we always look forward to the thawing period. Mud season is almost upon us.
The mud season.
Right.
Well, we're excited for 2023, and we've for those of you who are interested, we worked on a market outlook that we can send to you. We interviewed a lot of our brokers. We looked at a lot of different publications out there looking at market rates, those kinds of things. So if you are interested in some specifics after this, let us know and we'll get that over to you. But first and foremost, we just kind of wanted to go over the market highlights when it comes to the ranch real estate market, like a bigger overview. I guess we can start first with looking at how the other type of real estate markets out there are doing and how that might impact us, or if it even does.
Sure. Well, it's interesting because, we work probably more in the Intermountain West in ranching than we do farming. Although we have our combination of farms and ranches, especially as you move east and then further west. So rely on a lot of different data to try to figure out where we're at, and some of it we have to do on our own kind of effort here. But we do have certainly available, what's happening in the residential markets. We certainly follow what's happening in resort markets, and we're and of course commercial and industrial and other kind of land outside of what we typically these legacy ranches and recreational properties. So. What we're seeing is as we look around, especially like in the resort markets and some of the residential markets that we operate in, we're not really following the same trends as the residential. We're not seeing that same level of slowdown from a development standpoint. And a lot of that has to do with development, and some of that's certainly influenced by interest rates and where our kind of, our market is less impacted, I think, where interest rates, because many of our, purchases and sales are, cash buyers for the most part. And
yeah,
so,
I mean, it definitely, it's a different type of market than, the residential, because to your point, it's not impacted by the same factors necessarily.
No, I mean, supply demand, which we'll talk about, is certainly an impact on our market and our product line that we tend to focus on. And so that probably has right now, what we're seeing is the greatest impact in anything is availability. But there's other signals that are happening out there and lots of different projections we can talk about. But yeah, you really need to look at region-wide data as far as ranches, and we do follow primarily the Intermountain West, which will be different than the Southeast, and will be different than California and the Upper Northwest, and even some of the Plain states. So
Mhm.
it's important. We're kind of just giving an overall perspective on in the areas in the Intermountain West that we focus on
Yeah.
primarily.
And if you're interested in kind of where we're getting our data, please feel free to reach out and we'll let you know. But a lot of it is, like you said, different reports from regional markets,
Mhm.
resort towns, those kinds of things. But then in-house, we are tracking a lot of this sales data and the movement of properties that are similar to kind of the products that we're selling. And overall, just at a kind of a basic level, the projections for total market activity show prices leveling some throughout 2023, but
Mhm.
no huge reductions like we're seeing in a lot of the residential spaces. Total sales volume will continue to grow and remain higher than in 2022. And then high quality ranches that check all of the boxes still sell quickly and have not lost value. So for those of you listening, that means that they aren't sitting on the market forever. Like a lot of places in Denver, for instance, because that's the market I'm familiar with when it comes to residential, homes are
Mhm.
staying on for way longer than they have in the past. And we're not seeing that necessarily with ranches. Ranches have always kind of stayed on for, the 6 months to a year just because of the selling season.
Well, I mean, yeah, these residential markets and things like that, they're measuring in days, and we tend to measure in months.
Yeah.
So it's a little different, right? And we talked that maybe the sales volume should grow this year based on demand. It's hard to really say what's going to happen there. I think it has a lot to do with availability.
Mhm,
We're still in that low supply aspect of there's just lack of supply, lack of inventory, and if that continues to be an issue, then the question is, is that affect the overall market from maybe the total sales per or cost per acre might go up, but the total sales volume will it keep pace? It's hard to say, but we're
right.
expecting that typically, that this should loosen up, and that more inventory should become available. But we won't see that same kind of down market trend that we're seeing. It was odd. Like I even watched the residential market because the Denver area is really, has been booming, and we looked at it, and the odd thing was, you got into January and the market actually increased.
Mhm,
Uh, and some of that were things that were happening with development and giving incentives for buyers to buy, and we're seeing that not that won't be a long term effort by developers. I don't think so. You see things like that again. Those things, they just don't impact the ranch market at all.
yeah. And one thing that we did notice in most of all the reports we were looking at
Mhm.
is, the last 2 years were crazy. We saw numbers we've never seen before. We saw interest we've never seen before. But even though the numbers are projected to not be as high as, 2022, 2021, they will still continue to be higher than 2019, which is a good indication for sellers that people are still willing to pay that amount of money for ranches that are out there. So we're
Yeah,
not seeing a huge decline. It's just there was this weird influx and pricing that happened in the last 2 years that might be normalizing a bit.
I think it is, and we've seen that over the trends of 30 years. You'll get these um, time frames where there is this, it certainly was different with the pandemic and some of the other economic factors than previous um, highs or lows in the market. And I'm going back to the kind of 90s,
Mhm,
and looking back at those trends. But I think overall, though, from my experience, we've been up since 2013.
mhm.
And so you have to expect at some time a bit of settling down, but I don't think it's going to happen this year.
Yeah, I that's all the projections we're seeing kind of indicate that same feeling that
Mhm.
you're having.
Yeah.
One of the other places we looked when we were looking at market data and just market outlooks looking at 2023 was the Federal Reserve when it comes to farmland value. we don't particularly only handle farmland, but it is a good indication of land values overall, and kind of what bankers are looking at. So some of those figures, the majority of bankers expected farmland values to not change. 25% thought they were going to increase and 30% thought they would decrease. So I think that's a good indication, like we've been talking about, that it's just a settling. It's not, we don't foresee a big uptick or down spiral for a lot of these properties or values.
Yeah, and again, you'll look at the Kansas City kind of Fed rates, and then you've got to go out, to the, California and the West Coast, and sometimes it's really hard to cover, the stuff in between. And you're right. I mean, a lot of this is farmland, but you do get into areas where you're getting to pasture and and some of the grazing capacity. But I don't disagree. But it also shows there's a lot of disagreement where we're at. I mean, and we'll talk about this later. But just even some of the recent activity and recent news may change some of the Federal Reserve's kind of outlook as well.
And another indicator of some of that, again, this is farmland, but was the Land Expo 2023 looking at grain prices and grain producers. So again, not a clear indication of kind of these higher end recreational properties, but this is another kind of indication that things are, the margins are squeezing. We're definitely navigating things from the peak. We experienced this all-time high, and things are just settling a little bit. Maybe a little bit more easy to navigate as a buyer.
But some of some of our cattle clients have called recently and said, it's been really good. I think, I need more land. I need more land to graze. I need, I might, a few of our particular clients I've got a good irrigated base and things like that, but I just need more, more grass just to graze on. So that shows me, and I've looked even in some of the old family sheep ranchers in Colorado, for instance. I've seen them acquire more properties. So it's a good sign. Like they're saying there's still a need for them too. And I think that still bodes well for, agriculture. There's still these food security issues that you can't help but read about. And you read some of these articles too, just limiting foreign investment, which is kind of, even, I've seen it in other places, but now we're starting to see that some of those things come up in very state houses throughout the West, like Montana, for instance.
We've always seen it, like we do business in Argentina, and they definitely dissuade a lot of foreign direct investment. So to your point, it is interesting to see that that's kind of coming into play
And I
stateside.
think it's kind of food security stuff and things of that nature. But I don't know how that will have a bearing, because it's really never been a big issue in a lot of our markets where we operate. Probably, again, more applicable to some of the real productive farm ground. Yeah.
Yeah. And we've only, I think 10% of our clients have been foreign direct. So it won't impact us there either.
And most of those are recreational type properties anyways.
Yeah. Another thing I just kind of wanted to go through. So that's like the overview of what we're seeing. But then I kind of wanted to go through some of the things that are affecting these markets. Like, why is this happening? Why are we seeing these kind of differentiating factors? And I know you alluded to it a little bit earlier, but inventory is definitely keeping prices up. The supply is down. It always is at this time of year. We do a lot of our selling and closing in the winter, and then kind of fill the funnel in the spring. But it's low for what we've seen in the past, which is good in a lot of ways.
Yeah, everybody's low from that standpoint, and I think I think if you look at all the quotes from our brokers, we're all kind of saying the same thing. It's, we have slightly different perspectives based on some of the territories we work on, but I think we're all saying the same thing. And it's not just us, it's throughout the whole industry. And so that's going to continue a bit, but I think we're split with, even in the firm, if that's going to loosen up this year or not. We're kind of split. And again, crystal ball, it's really hard to tell, because, where do you put your money? And land seems to be that great, asset
A good hedge.
to invest in and hedge, right? But
Mhm.
supply is down, and that demand is just there, especially for the higher quality. We did talk about that, and we tried to distinguish that in our last board meeting about you know areas that have a water right, irrigated with elements. Check the boxes we were talking about earlier. Next to national forest, has a mixture of forested lands and grasslands, running water, an hour within a resort. All those things that we say check the boxes. There's that stuff is still moving and at a fairly good clip. Again, a lot of it based on lack of inventory.
Yeah. I mean, a great example of that, just to use real-time evidence, is those
Mhm.
Cross Mountain pieces that we have closed
Right.
in the past couple months. Those things came on the market, not things, beautiful pieces of land came on the market in December, and we're almost out of them.
Yeah, I had brokers calling from all over the country on those.
Yeah.
So yeah, and we were getting full price offers, which is and we adjusted the prices too, and that's also a reflection that the inventory levels. Again, you got to price these things right. Still, uh,
Mhm.
there were days in the past. We worked in some of even like Aspen markets, some of those resort markets. As I say, you could put a dartboard up there and put numbers on it and just throw at the dartboard and see what comes up and list your price at that. And
Right.
we still don't believe in that concept. And you still have to have, go back to our valuation discussion we just had. Be good at your valuations. And so all this is relative on making sure you have a proper valuation and
Yes.
and that your per acre values are just not so absurd that nobody's going to buy it.
Yeah, because even with low inventory, we still
Mhm.
have savvy investors who know what they're looking at, so
Yeah.
pricing it correctly. And with that, another factor that's impacting, demand a little bit, especially in our industry, is the uncertainty of interest rates and some of the most recent news with banks. While we do say a lot of our clients don't depend on interest rates to purchase things because we have a lot of cash buyers,
Mhm.
their businesses are affected by some of these things happening, and
Absolutely.
that in
Yeah.
turn can affect.
Psychology too, with Silicon
Mhm.
Valley and Credit Suisse and those things. And those are fairly recent. And so that's a day by day, um, impact. And I have good friends that own banks, and I'm just curious to see how, and heck, even all my banks where we have our funds. We got letters. Hey, we're okay, but it,
Like,
you know,
maybe think about something different.
yeah, that shakes people's confidence and maybe they hold on to cash longer. So that can certainly have an impact. And that wasn't necessarily anticipated. So a little shock to the system. And what other shocks are coming? Again, we can't predict those things. And look like interest rates were going to continue to rise, but maybe that's not the case right now. So those are factors that I'll be curious to watch the next month or two and see how that impacts the rest of the year going
Mhm.
forward. And there are other things we talk about, even just commodity prices and how those impact
Investment.
our investment, and those are market factors that continue to impact. And I think what was that? I think they at least the farm real estate values as reflected mainly by increasing commodities. I went up. I can't remember what the number was.
8.4% in
Okay.
Western states last year.
Okay. All
So
right.
we
Right.
saw, I mean, that's a pretty sizable increase.
Yeah. And so do these commodity values stay strong?
Mhm.
Uh, and I hear estimates that maybe that has inflated the farm and ranch values.
Right.
And I don't know if that's going to continue either. Again, we're also seeing weather impacts all these things too.
Right. It's
You
this underlying thing that doesn't affect a lot of other investments, but it really does impact
Yeah.
land investment.
Well, we're just seeing the snow loads here. We were going to talk about drought a little bit, but the snow loads throughout the West are amazingly high, and that just means there's going to hopefully be more water in the rivers, that then there'll be more water available for irrigation. And I don't know if that's going to bring back the levels in the Colorado River Basin and some of these basins that are really have had drought and experienced drought for 30 years. But it'll have at least an impact, and that might say, okay, well, do we have more feed available, and et cetera, and then does that impact those commodity prices in the
Right.
end?
I mean, at the end of the day, though, a lot of these kind of market influences, interest rates, banks, uncertainty, what's always been great about land is it's an incredible hedge that you can trust. Like, you put
Mhm.
your money there, the bank isn't like something weird is going to happen with the bank. The interest rates aren't going to affect the land that you have. It's always been this really interesting way to invest your funds when things like this seem to be turbulent.
Well, yeah, and it's like, well, where do you put it? I mean, okay, stock market's a little funny. You keep it at a bank. Well, everybody's worried about that. Um, and so where are the other alternative investments, I guess, is the question. And I think that's what we're seeing. And so many people have invested in that have invested in real estate. They may have, if they did use financing, and the financing is so cheap, they don't have to sell. So I do think if we see a switch in the commodity prices, though, and other things with increased interest rates and the operating costs and things like that, will impact ranchers and farmers, um, and then in turn that will impact the market.
Value. Yeah.
Yeah.
Well, with all of that, I mean, this is a lot of data. Again, if people want specifics, please feel free to reach out and we'll get you some of those numbers. But at the end of the
Mhm.
day, everyone's like, okay, you're telling me all these things. What is your advice? I'm looking to sell, I'm looking to buy. What does all of this mean for me? So I guess we'll start from a seller's perspective.
What we say is we'll cover it real easy. It's good time to sell, it's good time to buy. We're brokers, right? That's what we're supposed to say.
We sell our services and we sell land.
Yeah, yeah, yeah.
The American dream.
It's great for everybody. Yeah, because we do represent at this point, we probably, we it's almost equal, our sellers and buyers at this
Mhm.
point. And so um, it does seem it's really hard to say, right? You want to talk out of both sides of your mouth. And the selling market just seems, if you're really well located and have all those checks on the boxes, it's like it's still a great time because there will be, I don't know, we're at that precipice, but there will be at that time where there'll be a lot more inventory, and that will bring values down. Things
Mhm.
will be on the market longer. So I think it's still, I think we're moving towards a buyer's market. um, I feel that way based on what I've seen, but we're not there yet.
Mhm.
So I think for buyers, I guess you can wait and see. But for me, there's just you're going to see more opportunities, become available, and again, just kind of figuring out what those values truly are. These things don't change in value overnight either. In
Mhm.
either case, it's not like you're going to see, oh, there's a 20% hit on land prices on ranches overall. Just doesn't happen because that market doesn't respond in that way
Mhm.
ever, because people just don't have to sell.
Yeah,
Uh,
I mean, and we've talked to appraisers around the West
mhm,
about kind of their insight of what they've seen in like the fourth quarter of 2022. You know, as a seller, it's kind of this incredible opportunity because, okay, there's low inventory. I can still probably get the prices I want. So if you've been thinking about selling for a couple years and not knowing when to do it and kind of concerned about what things were like the last couple, this
mhm.
is just a stable time where you can still get these values if priced correctly that you're looking for. Before maybe there's not a downturn in 2024. These things do take a while, but
Mhm.
this is a really good time to, you know, reach out to a ranch broker, get a valuation of your property, and still be able to get those buyers who are trying to hedge against, some of this other inflationary thing.
Well, and that I think too, if we see the inventory go up, yeah, it might change, but at the same time, I think there'll be a lot more interest in looking at 1031s as we see some
Mhm.
taxation issues coming across. And so We'll probably be seeing, what we've seen in the past are, operating ranches that are in high demand areas, then selling and then moving their funds to areas that are less recreational oriented. So, you know, in the past, and I would say in the last 6 months, I've seen a lot of, fairly valuable properties in, say, eastern Wyoming and Montana and Colorado, trading hands uh, to operating ranches at fairly high numbers, but they're trading out of what's already perceived to be a high value properties in more of these high check all the boxes, high demand areas that near
Mhm,
national forests and higher elevation with that check all the boxes. So
mhm.
we're seeing those folks being shifting their assets into other properties that it's amazing when we start, checking on the comparable sales and finding these old time ranchers buying these really cool places. And wow, that's a $15 million ranch. And they use proceeds on a 1031.
Mhm. Which is neat. We love to see that kind of exchange of hands where it's still going to the people that are gonna work it and steward it and take care of it.
Yeah.
And then just kind of on the buyer side, because, we've heavily talked about just like values staying where they are, inventory, all those things. As a
Mhm.
buyer, it might seem very daunting that the inventory is as low as it is. You know, where I'm not finding what I want.
Right.
This is kind of where a ranch broker is super necessary because there are a lot of off-market opportunities. There's a lot of things out there that you might not know about. And I think inflation is affecting people more than it was in 2022, 2021. So there's a little bit less competition for buyers. There was kind of this urgency with some of our buyers we were working on to just pay whatever because they didn't want to lose out on a ranch. This is a really good time, again, with sellers too, just like to calm down, understand what you're looking for, and not feel like you're being pushed into some type of investment that you aren't
Uh,
sure about.
yeah, I think just be patient, and think of all the buyer questionnaires we do to really ratchet down what you're trying to accomplish and what your investment goals are, and then look at your operational goals, and that's why we're trying to match people better, even with the practices of how they buy, or, why they're buying, and it's just the patient. Just but we've invested a lot more time and effort and money, even identifying properties, that and helping people from with those off market situations. But I think that the buyers just have to be patient.
Mhm.
It's going to become available, and things will loosen up a little bit more.
So, what are your, I guess, closing statements for people who are looking to get in the market, have questions, unsure about kind of where things are headed?
Yeah, I think you want to update your values and see what if you've had we look at properties too. People have such a low basis, and now they're at these very high values, and if they're going to sell, whether they're going to reinvest in, and we can help with all that. But positioning and this, I think it's just really important to focus on, um, that you're just getting a market value for these places and just double checking the valuation, prospects. And I think that's what we're really good at. And I'm not too worried about, uh, sellers or buyers right now. Sellers are clearly, we've got, there's opportunity. Just, remain cognizant that there's true markets out there, and follow what the advice of
Mhm.
what we're trying to provide our clients. I mean, the other day, for instance, I spent over a week on a kind of evaluation for a client, because of all these kind of things that are happening: conservation easements, power lines, separated parcels in the midst of
Leases.
BLM, and what's the value of the river going through, and all those things. Just understand what that true value is, and don't get caught up in the hype.
Mhm.
And we've got to take some of that emotion out of that transaction. So take the emotion out, and you'll do fine.
Yep. Look at the values. Call us. Call Ken,
Mm.
because he loves to talk land. He loves to take values. So he's definitely your guy, or any of our brokers. But thank you so much, Ken, for taking the time today. I'm looking out on 2023 and I'm excited to see what happens because we've already worked on a couple new potential listings that I think will be really interesting to folks. So
Yeah,
excited.
those are gonna be fun. It's great to see some, like I said, some of the snowpack happening right now. It'll, I'm imagining a good spring and a good thaw, and I get to put my mud boots on.
Love it. Well, as
Mm.
always, so great to see your lovely face. Thanks for joining
Yeah.
us. We'll see you next
Yeah,
time.
thanks. Right.
See ya.
Bye.
And if you want to learn more about ranch real estate or ranch marketing process, or if you want to know about our market outlook, please be sure to subscribe to our newsletter on our website at www.murrayranchgroup.com or give us a call at 303-623-4545. Thanks so much. See you next time.